Today, the fight over Robinhood shares linked to FTX rages on. Another crypto company blames the bear market for layoffs, and Bradley Duke of ETC weighs in on the Celsius and FTX bankruptcy proceedings. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices are mixed to end the week as December's unemployment data revealed the U.S. job market remains strong. The unemployment rate fell to 3.5%, surpassing expectations, but at the same time, the pace of wage growth slowed, giving hope to some investors that the job market could be cooling and that it could signal lowering inflation. As of noon Eastern, Bitcoin dropped slightly to around $16,820. Ether rose by about 0.9%, and Solana broke its recent surge upwards, dropping nearly 4%. All three cryptocurrencies are higher for the week, though, and outpacing the S&P during the first week of trading in 2023. All right, let's talk about the top stories. First, the battle over Robinhood shares linked to FTX continues. Sam Bankman-Fried argues that he should keep control of around $450 million in Robinhood shares, disputing a claim by the bankrupt crypto exchange he used to run. According to this court filing, three parties have tried to get control of the shares, including bankrupt crypto lender BlockFi, an FTX creditor, and Bankman-Fried himself, who indicated he wanted to use those shares to cover the cost of his legal bills. In principle, the 56 million shares are owned by SBF and FTX co-founder Gary Wang through a holding company. In this court document filed last month, FTX argued the shares should be frozen until they can be divvied up fairly among creditors. SBF rejected that idea in this filing yesterday, arguing that he and Wang legitimately bought the stock using money borrowed from FTX's trading arm, Alameda Research. Yesterday, we told you that U.S. officials are seizing Robinhood shares tied to SBF. A U.S. attorney told the bankruptcy court that the DOJ didn't think the shares belonged in the bankruptcy estate, and that debate over claims to the shares could be worked out in future hearings. Next, more layoffs facing the crypto industry amid the downturn. Crypto exchange Wobi told Reuters it plans to cut its staff by about 20% because of the, quote, current state of the bear market. In a tweet today, blockchain data firm Nansen said that in the last 24 hours, the crypto exchange saw a, quote, significant increase in net outflows. Earlier this week, we told you about crypto firm Genesis cutting 30% of its workforce in a second round of layoffs in less than 6 months. And just yesterday, we also told you that crypto-focused bank Silvergate cut 40% of its staff after reporting a sharp drop in its fourth quarter deposits. Last, New York Attorney General Letitia James sued former Celsius CEO Alex Mashinsky yesterday, alleging that he defrauded thousands of investors. The AG claims Mashinsky lied to investors about the extent of losses when he was CEO of the now bankrupt crypto lending company. Mashinsky publicly assured customers that investing with Celsius was safer and more lucrative than leaving their investments in a bank. In a statement, the AG said, quote, as the former CEO of Celsius, Alex Mashinsky promised to lead investors to financial freedom, but led them down a path of financial ruin. Celsius entered bankruptcy proceedings with less than $2 billion in crypto assets, far from the nearly $5 billion it owed users. James seeks to ban the former CEO from working in the securities industry or as an executive in New York State and to have him pay for damages. Mashinsky did not immediately respond to CNBC's requests for comment. The suit was brought under the Martin Act, which gives state prosecutors widespread authority to investigate securities fraud. All right, on to our main story. Sticking with Celsius, a new ruling could make customers last in line to collect funds from the bankrupt crypto lender. A U.S. bankruptcy judge ruled earlier this week that Celsius owns most of the crypto that customers deposited. I spoke to Bradley Duke, the co-CEO of ETC, about the takeaways from this ruling and whether the industry has enough consumer protections in place. Let's start with that ruling and what it means for Celsius and its customers.
Yeah, well, look, I think it's always important when anybody's investing their hard-earned savings that they read the small print. And what the judge said was that it was very it was unequivocal in the terms of use. We're very clear about the fact that as soon as the funds entered the Earn program, that they were now owned by Celsius Networks and no longer by the investors. And I think that's really it's always worth imagining the kind of worst case scenarios when one's investing and reading the small print with that in mind. How is it set up? Is there a trustee involved in case the company in question goes bankrupt? And where will you stand in terms of other creditors if there is insolvency proceedings.
I think the phrase that comes to mind is "not your keys, not your crypto" in a situation like this. Can you talk about broadly the lessons learned for customers across the crypto industry when they're assessing protocols or businesses before they put their money in?
Yeah, I think if you had to, looking back on 2022, the dominant theme is really a loss of trust in players in crypto by the investment community, and I think that's generally because of where we had some very, very bright minds with wonderful ideas executing their ideas. What was lacking was good governance and proper business procedure and things that are not very interesting, but actually super important in terms of the longevity of a company and running, continuing to operate as a successful going concern. So that's really been highlighted. I think, just speaking about the point before, I think it's really worth doing due diligence on any company that one is considering investing in, and not just following a sort of a herd mentality whereby people or some serious companies have invested in this company, so that it must be fine. I think that can lead to trouble, as we saw with a lot of big name companies that were embarrassed by the collapse of FTX and others. And I think it's really worthwhile just trying to look at the management as well and seeing what experience they have, because experience in financial services is different kind of experience when, in terms of running a company. When you're now holding client assets, and if you don't understand the importance of segregation of assets, of segregating different parts of the business, where there could be a conflict of interest. These are areas which are quite highly regulated in financial services, but in crypto, they have not yet been regulated.
So you brought up FTX. So I want to start there. And then I also want to talk about regulation. Both the FTX and Celsius bankruptcy cases face drawn out processes. But can you walk me through your expectations for the FTX case and how long it will be before customers see any of their money, if they ever will at all?
Well, I think sadly, there is going to be a very long time. If we look at what happened with Mt. Gox, that still hasn't been resolved, and the Bitcoin that was recovered still hasn't been returned to investors in that, or people who made deposits into that platform. So I expect that if anybody has got funds locked up in either of those companies, expect it to be a long process. It's going to be drawn out. It's going to have to go through at the speed of the legal systems, which can often be slow. And really, I don't see that resolving for at least a few years.
So let's pivot to regulation. There are many lessons that could be learned from the turmoil we saw at the end of 2022. How much work is needed to be done, and what should be the priority for regulators in terms of protecting consumers or adding some sort of guardrail to this industry?
Look, I think it's essential that there is some well-planned, well-conceived regulation that's put in place for crypto. I don't want to regulate the magic of crypto. I mean, there's been so much innovation that's happened these past years, so many exciting developments in DeFi, etc. But you need to have at least a minimum of regulation in place to protect the end investors from what we saw happening this past year, where there was real abuse, I would say, by the management, and often maybe just because of lack of experience. But nonetheless, it's still abuse when funds that have been deposited into a so-called crypto exchange are being used for bets on a VC companies, and that's with an entirely different risk profile and term periods for those investments. It's just it's a real problem, and I think with a minimum of regulation around segregation of funds. And also, I think a separation of what is called an exchange and what is brokerage. I think those are very important areas that in the world of crypto had been blurred up until now. A regulated exchange has got in the US and in Europe and around the world has got very strict rules about how the exchange should operate. And brokers themselves, who are the ones who are members of this exchange, have got very strict rules about how they operate, how they face their clients, and also assess the suitability of certain investments.
So I want to end with talking about outlook for this year. We just started 2023. With all the turmoil in crypto right now, what are your expectations for both customers and for businesses? I mean, are customers going to stay hands off with all this uncertainty, or do you see more businesses going under and declaring bankruptcy? What's your outlook?
Oh, look, it feels like we're kind of bottoming out in terms of the, in terms of the bankruptcies and the fallout. Because a lot of the fallout that we're seeing now really stems back to the Terra Luna collapse that we saw, in Q2, and I think, in terms of the crypto winter, certainly the collapses of Celsius and FTX will definitely have the effect of delaying the thawing of that winter, and also has damaged a lot of the credibility of the industry in terms of loss of trust that we were speaking about earlier. But I do see the thin green shoots of recovery, and I think this year it'll be interesting. The timing is quite difficult to predict. But there are a lot of good stories that are happening this year. There is the Shanghai fork that's coming up, on the Ethereum blockchain, and certainly, I think that it's been interesting to see how holders of, for example, Bitcoin have really just stayed firm during all the turmoil. They've just decided, look, this is a long-term investment. I'm a hodler. I'm here for the long haul, and they've stuck to their guns. And all the statistics around that show that the private or retail investors have stayed true to their beliefs and are waiting this one out.
All right, that's all for Crypto World this week, but we'll be back again on Monday, and we'll see you then.